Breaking news here on Martyn Lucas Investor. We've just reported on the Uber earnings, and if you want to listen to the full Uber earnings, wait till the end of the video or click above my head or down in the description, and you can go and listen to the full Uber earnings. But here we're now going to do a full review using the software I use, which is AlphaSpread. If you're one of my members, if you click above my head, it will take you to a special video, a members only video, where you can get a 10% lifetime discount to AlphaSpread. However, if you click above my head and look below in the description, you'll also find the regular referral to AlphaSpread. It's a wonderful software. I use it all the time. But if you are a member of my channel and you go to that members only video, you will find my members code and you'll be able to get a lifetime 10% discount. Anyway, let's go straight into our review of Uber. We've just had the earnings. Should you invest in it? Well, the most important metric is the intrinsic value. Let's go into some details. If we go into the best case scenario, if the world is perfect and everything is great, and we value the company at $63, it's undervalued by 27%. If we give it a base case and value the stock at $36, it's overvalued by 21%. And a worst case scenario, if we give it a value of 25, it's overvalued at 46%. If we look at the growth over the period of time with Uber, there really is hardly any growth, really. If we look at it, it's hardly moved like 13% or so since it IPO'd. Is there any point owning this stock? Well, for me, I don't think so. You might think it's got a huge potential growth, but for me, there are far better opportunities. However, let's look in more detail. Wall Street giving it up 25%, relative value down 12%, DCF value down 30%, intrinsic value down 21%, and today's price at 46.58. It has dropped since then. It's now down at 47. So not that good on earnings, if we are honest. Let's scroll down and have a look at the valuation history. It was slightly better here at $31 back at this point here in June of 22, a year ago. But now it's risen since then, but it's just sort of trending sort of flat, really, for years and years. Doesn't really go anywhere. The fundamental analysis, this is very, very important. The financials of the company, if we look at it, 35 billion at the moment, which is up, if we zoom in there, you can see up 3%. If we go into this metric in more detail, you will see it's been going pretty, pretty flat, really. 10.8, 10.5, 11, 11.4. It's not really going anywhere. And this is our latest valuation here is, let's go all the way up to March 30th, 23, 33. Now it's starting to move. June 29th, 35 billion, and estimated. Now, the analysts are giving it a similar trajectory going forward, not accelerating, but similar. And to this point, it hasn't really made any gains for the shareholders, even though we can see the revenue going up. There's been no real gain for the shareholders. Is there any sense in owning this? Operating income, 573 million, up 0.64%. Okay, so that's good. We can see the capital expenditure is negative at 240 million, and that's an improvement of minus 3%. So capital expenditure is going down, less spending less. That's good sign. Let's look at the balance sheet. The balance sheet is very, very important, and we can zoom in to make it a bit clearer for you. 34.1 billion on assets, 25.4 billion on liabilities. So they are on the right side of the balance sheet, which is very, very important. If we look back now at the stock, as I talk about it, it's starting to go green now. It had a big drop this morning on earnings. It was a miss. We need to be clear. It was a miss on earnings. However, I still don't think it's a great stock to own. I think there are better opportunities in the market. But let's carry on looking down here. The balance sheet decomposition. We can see here 34.1 billion and 25 $4 billion in liabilities. Let's look at the efficiency of the company. Now, the efficiency of the company is very, very important because it's all very well having revenue, but if you haven't got a wide margin, you haven't got a wide moat, and you are at risk of competition, and you're at risk of if you haven't got much margin, you haven't got much room for movement. If things turn downward, then there's nowhere for you to go. They've got a decent margin at 32%, which is nice. It's 36% over the last 3 years. 5 years, it's 36%. It's been 35%. So it's down slightly from where it has been, but nevertheless, 32% margin. You can see the operating income is minus 2%. Net margin is down 1%. PCF is 5%. All right, now then, this is very important. This is the fundamental scores. Now, if you do like what you're seeing, the way I'm presenting this with Alpha Spread, you can get a referral code from me. Click above my head or look in the description and you'll find it. However, if you go to the video in this video, I've given you the link below and above my head. It's a members only video, and it will give my members a 10% discount, essentially making my membership again for free. I have the best membership program where I make my membership the best investment you'll ever make. It never goes up in VAT, it never goes up in cost, never goes up in inflation, and I add more and more perks to my members all of the time. And if you use all my services, actually, I pay you to be a member. I've negotiated great deals with my partners, and my members get the best deals. And in fact, if you use them all, you would actually my membership would actually be paying you. So there you go. Anyway, let's go to the fundamental score. As you can see here, 36 profitability score. It's not great. It's amber. It's not red. It's not green. It's not great. Not great. It's the biggest problem is that the average DE is low and positive net debt is high as well. So 36% solvency score. They're not going bust anytime soon, but they're not thriving either. So it's. Again, for me, it's not an investment. There are better opportunities out there. But if you see that Uber could grow in the future and increase on its margins, then maybe you'd like it. Let's have a look at Wall Street. Now, Wall Street are much better at analyzing this stock as opposed to other stocks because they can see where we're going. Whereas we're looking at robotaxis, which I think is the future with Tesla. They can't value that because it hasn't happened yet. They can't value things like Optimus and stuff like that. They can't value Virgin Galactic. All these stocks for the future, they struggle with Palantir, but they're very good at looking at Uber because we know where we are. We can see the future much more clear. So if you give it the highest forecast, $70, we have the 50% upside. An average would be a 24% upside. $58, or worst case scenario, down 30% at 32. So for me, I think the average forecast is somewhere in between. The average and the lowest is probably about right. Again, 24% upside, that's average, but we're not averaging. I'd say we're somewhere between the lowest and the average. So again, maybe 11%, 10%, you're much better off just buying the S&P. You get a dividend, plus you get the security. I just don't see it. Anyway, if we move down to ownership is important. This tells us who has been selling the stock on the inside. And as we can see, the inside traders aren't buying it, but they're selling it. Again, we need to be sure of how much they're selling. We can't always assume just because they're selling it's bad, because they may just be selling a small amount, 1% of their allocation for tax purposes. So we don't want to get too excited about that. But nevertheless, insiders aren't buying it. They're not buying it. So the last transaction was on August the 21st by Chai Nelson, the chief financial officer, who sold 4.5 million USD worth of Uber shares. I'm not so sure it's all that great.
Let's just talk about the headline numbers, though, because I just said that those numbers were lower on the revenue side. But when you start to look through the way the business model is shifting, there's a little bit of an accounting issue that I think is worth explaining to the public.
Definitely. So our revenue on an as-reported basis was up 10% year on year. But we reclassified certain incentive spends for Uber Eats. These are promotions and price cuts that used to be classified as marketing expenses. We reclassified those as contra revenue. So
that's effectively then lowering the total revenue number.
Yes. So without that change, revenue growth would be 8% higher, which would have met or exceeded the street, et cetera. If you look at the business itself and the trend of the business, trip growth, we did 2.4 billion trips this quarter, up 25% on a year-on-year basis, actually accelerated from the last quarter. Same thing in terms of gross bookings growth and profitability. So the business is in great shape.
Are we at a point where we can look at Uber as a barometer of the larger economy?
I think
do you think that this is now one of those companies where you can say how they're doing is how everybody's doing?
I think Uber at this point is growing faster than the larger economy. So there's signal that we get from the larger economy, but the fact is we're gaining.
See, we can say all this, and that's fair enough, but we're not really seeing the stock go anywhere. I don't know what you think of this. I mean, obviously they're trying to talk up the stock, but I don't see it as a buy. I see much greater opportunities. I'd like your thoughts below in the comments of this video.
Category position within our category, we're growing faster than our category because we have the platform of both rides and eats. Generally, we're doing better than the rest of the competitors in the space. So I think it's a barometer of the economy plus, call it that.
Explain this piece of it, though. So mobility is continuing to be a very big bright spot. Having said that, you keep hearing about Americans all over the country who effectively say that inflation is killing them, things are too expensive. By the way, the prices of an Uber feel like they're very high for those of us who use them a lot. And yet, people are still using it. So what is happening here?
Well, I think that inflation is hitting everybody, and everyone notices it every day. If you go shopping, if you get an Uber, if you go out to restaurants, et cetera. But the fact is, as it relates to Uber and our rides business, gross bookings grew 30% on a year-on-year basis, accelerated versus the last quarter. But trip volume grew 29%. So actually, prices on Uber on a global basis are almost flat to up very, very slightly.
So why does it feel like, for those of us in New York, for example, or if you're out in LA or San Francisco, it is...
I'd like your thoughts. Have you ever used Uber? Write it in the description. And also, what do you think about how little that the drivers actually earn? A lot of people are not happy with what they earn when you hear this presentation coming across. Everything is so great for Uber, and yet the drivers don't seem to get a great deal. I'd like your thoughts below. And don't forget, if you like the way we present here, the service I use on Uber's on Alpha Spread, if you are one of my members and you click below or above my head, you'll find that members only video with that 10% discount, or you can just use my referral if you don't want to be a member and get Alpha Spread. But anyway, let's continue. Let's hear the end of this.
Is a higher number.
It's a higher number.
It's a regulated number too, because some of these cars, just to get into, if you're in New York, for example, just by default, the taxi commission is charging you a sort of a flat fee just to get in the car.
Yeah, in New York, for example, about 20% of your fare is taxes and fees, which is probably the highest in the country. So all of these taxes and fees add up. For us, insurance is another big cost item as well. If you look at the CPI print of insurance, car insurance, it was up almost 19% on a year-on-year basis. So it's harder and harder for businesses to do business profitably. And these are definitely issues that we've got to take care of.
In those regions, like in New York, where you're seeing the 20% of it in taxes and other fees, is it changing the dynamic with which, I mean, there was a period of time where people were using Ubers out in the outer boroughs just to get to work every day. Is that still happening?
It's still happening. So,
see, my opinion is that Uber is good and it provides a service, but as soon as we get the robo-taxi, Uber's finished. I really do believe that Uber will be crushed by the robo-taxi, and there's nothing they can do to compete against it. What do you think? I'd like your thoughts about that.
Uber in general is growing much faster than alternatives, whether that's taxi or mass transit, et cetera. And I think
all these fees are not slowing down congestion and everything else. Because that was also part of the argument was that we're going to get people into the subways and get people into buses. They, in a way, it was almost talk about Contra, trying to get people out of the view, out of the car.
I think that story's not over, right? I do think that subway in New York is coming back, and the volumes certainly are coming back. But you drive around in New York, it's plenty congested at this point.
Can we talk about the freight business?
Sure.
That is a spot where the line is not going up. What's happening there? We also saw what happened at Convoy, which was probably one of your biggest competitors.
Yeah. So what's happening with freight is during the pandemic, you had record shipping volumes and freight rates up at incredible amounts. And you had a ton of supply coming into the market, more truckers, et cetera, coming into the market. Post-pandemic, whereas the Uber business, the services business, our Uber Eats, mobility is growing very quickly, spend on goods has flattened out or come down. And so that has created a freight recession in terms of rates.
See, in my opinion, interest rates have peaked, and we're going to get a pivot in the spring and the summer. That's what I've been saying since the very longest time. I've been standing by it for a year. Every evidence is there to back that up. What do you think? Do you believe, like me, that the rates are coming down in the spring and summer, and that will certainly help Uber? But again, I think robotaxi will just crush it.
That we haven't seen for a very, very long time. And I think some of the smaller players, some of the weaker players, maybe some of the players who overspent have gone out of business, and they'll continue to go out of business. It definitely hurt our Uber Freight business. Is that
a business you want to stay in?
Definitely.
Is that a good business? I asked because of the Convoy situation. Is that a business?
So what do you think with Uber? Are you in with Uber? Do you think there's value here? As we've shown, there's insiders selling. The stock really isn't going anywhere. If we scroll up and look at the analyst review, I would say is between the lowest and the average, which would only give you maybe 10%. You might as well just buy the S&P 500. The profitability score was low. The solvency score is low. I don't see it as a great business to own as an investor. Yes, fair enough. You can use it, of course, as a customer, but as an investor, I just don't see it. So what do you think? If you are interested in using what I use, Alpha Spread, click above my head. You'll find the link, the referral link, so you can get Alpha Spread. But if you are one of my members, also look above my head and look below in the description. You'll find that exclusive members-only video, which will contain the code that gives you a 10% lifetime discount. So there you go. What do you think of Uber? Would you be in it? Would you buy it? Is it worth investing? I don't think so. All right. Thank you ever so much indeed for that. If you look over here, you'll see more videos that'll help you make an informed decision on Uber. I'll put the Uber earnings up there and some other videos I think that you'll find interesting. As always, until next time, take care of yourselves and each other.